There are too many times that I see new traders just hop into trades without taking this first step. And this is honestly going to be the make or break for a lot of people, especially if you're talking about long-term profitability. If you don't know who I am, my name is EQ. I've helped over 1,500 people learn how to trade since 2021. And the thing you want to do before you get into any trade is to map it out and actually see if the trade is worth your time. Now, when you're eyeing a trade, it might look decent, but when you actually break down the data, it might not be the best entry or it might not be the best trade overall. So if you connect all these higher lows, we are in a downtrend. So let's say I wanted to get into a short position on Bitcoin and look at some places that I would be interested in taking profits on this trade. What I would do is go to the sidebar and I would go to short position. If you're doing a long, you can open long, but in this situation, this scenario, we're going to open short. I'm going to put this at the entry and it's going to start off at a 1-to-1 risk to reward ratio. So I'm going to drop my stop loss down to here, just above the range high. So if price does come up and create new higher highs and create a new change of character, then I'll be able to get into that trade because at that point, I really don't want to be in it. And mind you, this would be for a leverage trade, for example, or like a sniper entry where you're going to be using a stop loss and a take profit. It's going to be a little bit different if you're doing this from an investing perspective. Now, let's say that I wanted to only play this down to 100,000 and I look at this range. Now I can see that based on the stop loss and based on this take profit, we're at a 1.37 risk to reward ratio, which means that I'm risking 5% to make 7%. Basically saying that you're going to be risking about $100 to make $107. Now, me personally, I like to make sure that my risk to reward is over 2. Usually I like to go over 3, but 2 is not the worst situation in the world. So let's say that I drag this down and I can see that, let's go to this little liquidity zone down here. If we tap this zone, this is going to be a 2.5 risk to reward ratio. So you're risking 5% to make 12%, which means that if I was risking $100 in this situation, I'd be risking 100 to make about 250 bucks. And then, for example, if we add a Fibonacci from bottom to top to see some more key levels, you can see that we do have a nice support hold right about the 7860, which is going to be right around 82,000. And let's say, hypothetically speaking, if price was to get into this range anywhere between 89 to 82, which would be in the epic golden pocket, and that's an extremely healthy retracement long term, that in itself is going to be a 3.8 to 1, almost a 4 to 1 risk to reward ratio. So risking 5% to make just shy of 20%. Which means you're going to be risking $100 to potentially make $400. And by doing this, you're going to be able to keep your risk to reward ratio in check. And at the end of the day, if this ratio is in the right spot, anywhere over 2 or higher, then realistically, you only need to win about 40% of your trades to be profitable long term. And I've seen with my own eyes a few traders that were hitting 40% in a month and then still cashed out around $15,000 in payouts from prop firms. And for this situation, I want to kind of show you what a bad trade would look like in this situation. So let's say we wanted to get into a long from here right now. We don't know if we're going to continue to retrace. So you're going to have to put your stop loss at the lower low. And let's say that you're aiming for all-time highs or take profit because that's the highest price has gone. We don't know where it'll go above that. When you actually add this target point, you're going to see that this is a 0.48 risk to reward. So you're risking over 9% to make about 4%. Now, this is completely ass backwards. In this scenario, what I would be wanting to wait for to see is if price drops and holds a support, for example, at one of those key levels like on a Fibonacci. So if we go bottom to top with the Fibonacci and we see that there's a nice little level in that epic golden pocket, now I might want to add this here. And now you can see we've dropped this to a 2.1, which this trade is very good. We can take this trade all day. And that's the big difference, going in between a 0.46 and anywhere above that 2 risk to reward ratio. And if you do want to trade with me, you can come join the Epic Trading Floor for free. That'll give you limited access to the website. And then there are about 70 all access spots left for anyone that wants access to everything, the signals, the alerts, community, academies, all that stuff. And then anyone that's interested in a one-on-one mentorship program, which is weekly meetings with me, there are 3 spots left. So you can go check those out. I'll tag the link in the video as well as the description, or go to epictradingfloor.com. You can type in EPIQ or EPIC and both of those websites will work. So hopefully you found this video useful. If you did, hit that like button. If you're not subscribed, hit that subscribe button. That'd be greatly appreciated. If you have any questions, don't hesitate to drop them in the comments section. I appreciate you all for being here, and I'll see you in the next video.